The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We had a lower day in the grain trade on Monday, at least in quartered soybeans, that is. It was more mixed in the wheat complex. Good gains in cattle and a solid day to the upside in crude oil. We're to talk trade deals, weather, and more. Joining us for a market conversation here on the show today, John Heimberg with Total Farm Marketing. John, good to catch up with you again this week. Let's jump into this. Not a lot of at least news headlines that really impacted the trade. The U.S.-EU trade deal, I guess, was probably front and center along with the weather once again as we kicked off the week on Monday.
Yeah, those are some of the bigger focuses out there. Is obviously weather forecasts look very non-threatening as we kind of get this system out of the way here the next couple of days. I mean, it's a warm one here in Wisconsin today. Got a chance for some pretty heavy thunderstorms again. They're talking maybe some potential derecho effects. We'll have to watch how things play out there. But, you know, after that, talking below normal temps for the majority of the Corn Belt. Moisture is good for a lot of guys right now from talking to them that, you know, they can get through pretty much the month of August, or at least three-fourths of the way through August here, unless the weather gets crazy hot again. So those things are really not a factor. I think a big part of it was some of the headline news over the weekend that Argentina was going to be lowering those export taxes again. And that just immediately makes Argentina beans and corn and wheat a little more available to the world. And our market quickly has to shift itself to stay in the competitive vein in terms of some prices. We've seen the impact in the soybean market currently over the last couple of months here. U.S. has not got one cargo booked to China, where last year at this time we had over 28 put together in that July-June window. Argentina's gone from 20-some cargoes last year to over 80 cargoes this year, again showing you the flow of how the grain is flowing out of there because of those export taxes. I think that's got something that really pressured the market today, as now we're kind of set up for a potential break here with these difficult closes in corn and wheat and corn and soybeans today.
Well, and you mentioned difficult closes. I mean, old crop corn below $4 on the board, old crop soybeans below $10 on the board, and you got new crop closing it on that 4 and 10 mark as well. And it's kind of that feedback loop of doom, it seems, in the quartered soybean complex right now, John. Just nothing good to move us off of some of these psychological levels.
Yeah, I mean, it's real hard for anybody to be bullish in this marketplace right now. You just look at just a couple of things that are out there. I mean, you know, obviously we got some pollination issues with some varieties, and now we're starting to see a lot of pictures of corn that looks pretty doggone good, pollinated well, filled out to the tip, that type of situation, you know, so that's kind of poo-poo and that little bit of an argument. Obviously, you know, now we're waiting maybe to see if we get a derecho today to damage the crop to some extent. Hopefully that doesn't occur, at least for individual producers that would be affected. Nobody wishes bad things on people, but there's really not a whole lot of bullish stories here. You know, even the corn sales we got on the export front today, you know, Mexico, unknown destinations, we believe that was South Korea, that stepped in and picked up some corn here again over the weekend. You know, those are nice to see, but they're very routine sales right now. So it doesn't excite the market at this time frame for both either corn and soybeans on those types of sales that get announced. So in this window. So realistically, it's going to take something here. I'm not sure what it is. Maybe it's going to have to be a trade deal or something put together with China. Obviously, we're negotiating with them in Stockholm today. Just got over with here a bit ago. No comments regarding an extension or any progress or agreements put together. They're meeting again tomorrow, maybe even on Wednesday. So we'll have to just continue to monitor those situations. But right now, it's real hard for somebody who needs to be a buyer in this market to want to step in, just given the momentum, given the potential for that big crop that's out there. And then don't forget to throw in this lovely time of year where things kind of get going real quickly as we start thinking about September and first notice day coming up here at the end of the month of August.
That's a great point. We're going to have various crop tours as well coming up that could give us another snapshot of what is out there across the country. And you mentioned the U.S.-China discussions. You know, the EU deal, not really any details there. A lot of these frameworks, there just haven't been too many details out there. And it just seems that these markets across the commodities, livestock, they're waiting for something big from China, India, et cetera, John.
Yeah, and those deals just aren't coming together. A lot of the deals that we've had out there, again, frameworks there. A lot of it's to agreeing to commodity numbers and levels that they're already taking at this time frame. I guess it's maybe just the physical commitment that they are going to maintain those purchases. So really, have they been market movers other than in the equity markets feeling a little better about maybe what the tariff situation is going to be? So in that regard, no. So this market's waiting for something in terms of what could be the trigger to get the funds out of their short position, get people excited to be a buyer in the corn market, and just don't have that right now. And actually in corn and soybeans here, especially at this time of year with the weather looking the way it is, it's the easy button right now is to push the sell button and keep pressure on these grains.
Wheat complex fared all right on Monday, kind of mixed around unchanged. I know the spring wheat tour we had last week, there was some talk about that yield being a little bit lower than last year and lower than USDA's estimate. It seems like that's maybe tried to give us a little bit of support here in this wheat complex, John.
Yeah, it has to some point. And also on top of that, too, today's export inspections weren't very good for wheat, but we've seen some decent demand, and there's been some chatter of a little bit more demand coming in for U.S. wheat. Now, I was a little surprised to see wheat kind of hold in there today, especially given the fact the U.S. dollar traded nearly a full basis point higher. Looks like it's trying to break out of its most recent levels here and maybe get some climb to it, but at least wheat hung in there today. Maybe some of that's tied to the wet weather, things of that nature, just maybe worried about quality, getting this wheat crop harvested. Does sound like we have pretty good numbers out there, maybe a touch less than last year in some regions, but still going to be a decent supply of wheat. So now we need to obviously move it. So today was the quiet day in the wheat market, at least in that regard. I think we could wind up being a little bit more of a leader downside when it wants to go, but a follower, when the corn market wants to pull things around like today.
Let's talk about the cattle trade. Triple-digit gains there coming out of Friday's cattle on feed and cattle inventory reports that came out. What's your take on those reports and some of the market reaction to start the week, John?
Well, that placement number on cattle on feed was definitely the big surprise there. That was well below the market's anticipation and expectations. That helped fuel up that feeder cattle market today. Did trade as high as $3 higher. Lives followed suit, again, closing at new highs, trying to break out of the most recent consolidation. I think this cattle market's not done yet here. Excuse me, but we'll see how the money flow goes. We are pretty lofty when we had those numbers set, so a lot of that was probably priced in, at least in this near term. So we'll have to see how things trade out. Typically, here's our typical cycle. By Monday, Tuesday, Wednesday, we can consolidate going into the weekend as we get towards cash trade.
Well, and it looked like maybe some spillover from cattle into the hog sector as well on Monday, but you mentioned that cycle we've seen. I will add with the cycle, though, boxed beef has been pulling back. Is that a seasonal sign? Is it consumer demand waning? I think those are some questions that folks in the industry are starting to ask more and more here, John.
That is a bit of a seasonal time frame that we see that type of a pullback. We're down about $5 on choice carcasses last week. They get a little bit back here, today with about, I think we're about $1.20 higher at midday. So at least a little bit of buying. We got to kind of watch here. Last year on August 1st, now we had a lot of things going on between bird flu and issues with JBS. On August 1st, feeder cattle market kind of just fell apart last year for a pretty big correction. Seasonal windows do kind of point to that. So we'll have to see if the money wants to flow out. But biggest problem is you still got an index that's trading significantly, high value. Cash markets are still extremely strong. It's going to be real hard for this futures market to fall apart unless that cash market really wants to fall apart first. It's just going to be the magnet to pull prices off of any sell-offs into potential rallies here at this time frame. Working with producers, it's hard. You got such a basis out there. Realistically, we've been buying puts, staying cautious just in case we get some black swan event that comes at us. but we aren't going to get real serious about hedging until we see some form of a trigger in the cash market that says, hey, we need to get things covered now. Therefore, we're still going to have a pretty big gap just given the width between futures and cash.
Any thoughts for you either in the hogs or in the dairy sector as well here to kick off the week, John?
There's a couple interesting things in that hog market. You got August 14th coming up. That's the end of the August contract. We're trading a couple bucks under the index here. So there's some pretty good strength in this hog market right now. I like being a little bit on the long side in terms of these hogs as well as December, summer hogs here for some potential movement. So we're kind of staying a little bit bullish there. Dairy markets are a different world right now in terms of trying to get things figured out. We obviously sold off hard again on the cheese demand, seeing a little bit of a pullback or a little bit of a bid now on some cheese prices. Maybe it's just getting cheap here. So hopefully that milk market can find some footing, especially third and fourth quarter. Not a lot of meat on the bone for the dairy producers out there. Biggest thing we saw there, though, last week's milk production report came in really heavy in terms of production being well above expectations, cow numbers going higher, all the things you don't need in a milk market that wants to try to build some value.
John, any thoughts on the outside markets as well? I know it's Fed week this week. Plus, I mentioned crude oil up a little over 1% on Monday. Any notes for you in the outside trade?
Yeah, I think that crude oil reaction was a little bit tied to the European Union agreement that we came through this morning. Now we'll see if those energy commitments can actually be met. They're pretty lofty, but it was enough to at least fire up some of the energy sectors in terms of prices today. Watching what's going on in August. Typically, August is not a good month for stocks. July is typically a very good month for stocks. So we might be in a window here. We could be due for a little bit of a pullback in that equity market. It's been a heck of a run higher. So we'll have to see if it wants to continue to move. But even today, a little bit of softness to start the week today. So again, it's something we'll have to kind of keep an eye on as we go into August. That maybe it's just time for a correction of some form. Not saying we're going to turn this thing over, but just a good seasonal window where the month of August has a tendency to be a little more negative overall over history.
John, any other final thoughts you would share with folks on the show today?
There's still some value in that soybean market, especially some of these lows that we put in here today open the door for some pretty aggressive downside targets for both corn and soybeans. So just make sure you're staying active. Look at opportunities that are there. I have a feeling we're going to see a little bit more pain in the front end here, especially as we get closer to harvest if this weather continues to be as friendly as it is.
John, if folks want to reach out to you there at Total Farm Marketing, what's the best way?
Feel free to give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website, totalfarmmarketing.com.
Always good to hear from you. John Heimberg, Total Farm Marketing. Thanks for joining us here today on Market Talk, John.
Sounds good. Have a great week, everyone.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.